Hello, hello, hello. Welcome now, Stock Trades. Mic check 1, 2, 3. All right, guys. So in this video, we're going to go ahead and we're going to do an analysis of the CPI report. So by the time you leave this video, you're going to be an expert in the analysis of the January 11th CPI report that was released yesterday. We're going to go ahead and I'm going to walk you through this presentation. And then together, we're going to watch a video from Bloomberg, right? People that actually know what they're talking about. And then I want you to use your expertise that you learned from this presentation and then see exactly the bullcrap that you're able to parcelate just with understanding informed decisions and essentially having someone do all the work to save you time. So without further ado, let's get started. So market analysis and CPI report. Yesterday's CPI report was expected to be higher than usual, but it was perceived to be hotter than expected. Obviously, the 10-year yield showed a slight increase in response to the news, but it has yet to test our purple line resistance, which will show you what we're talking about. The purple line resistance is here, right? So the 10-year yield was actually increasing before the CPI print even happened, which we knew already it was going to be hot. Whoever tells you that we didn't know is lying to you. And then once it was released, it went up a little bit, but then it basically came back down, which is why we had a flat S&P 500 yesterday, in terms of the gains. It was just flat. But overall, I'm going to read it to you guys here. So after the market digested the CPI report, the 10-year treasury fell and the S&P 500 recovered its losses. And the overall market was flat. So a deep dive into the top 5 contributors within the core CPI revealed 3 of the highest contributors of the core CPI was in the car category. This was literally car inflation, okay, guys? Car and shelter, okay? So core CPI contributors. Examining the 10-year yield, we saw the increase, it tested the support line, and then we went ahead and basically faltered back down. So let's go ahead and take a little look-sees into the top contributors of the CPI. So shelter was one of them. One of the top contributors within the core CPI was, affecting the overall, inflation report. But if you go ahead and analyze the bigger contributors, it was auto insurance. It was the motor vehicle, right? Motor vehicle insurance was another more significant than so, I believe, than shelter and recreational services. So let's go into the specifics and dive a little deeper, right? So used cars and trucks. So if you don't recall here, so used cars and trucks were among the top contributors of the core CPI, influencing market performance. The top 3 of these were in the car sector, okay? We went ahead and already talked about the 10-year yield. In terms of the auto insurance and impact, here's where we get technical. Month over month, auto insurance increased by 1.53% month over month, significantly impacting market trends. So if we were to look at it, 20% of this increase was actually due to auto insurance. So excluding auto insurance from this report, if we were just to take off auto insurance, we would be at the Federal Reserve's target point, which is exactly where we need to be. Okay. So analyzing auto insurance reveals it constitutes half of the inflation. So if we were to just analyze the auto insurance, it's literally half of the inflation report. All right. So let's go ahead and let's just look at these deflationary pressures. Used car prices, recall that these used car prices were higher in the past couple of years, peaking at 2021. Let's look at auto insurance. As deflationary pressures causes car prices to decline, the month-over-month change in auto insurance will begin to align with reality. There's a lagging effect. Car prices peaked at 2021, okay? So those car prices are expensive. The parts are expensive, okay? So auto insurance had to basically recapitulate and be able to increase in order to offset the peak of 2021. But luckily, used car prices have been trending downwards, which means that sooner or later, auto insurance prices would go down as well. But let me give you something here. And this is going to be the one that I laughed at, right? So therefore, one must ask whether the Federal Reserve will really delay cutting rates and risk a complete collapse of the United States economy and a recession, all because of auto insurance? Do you really think the Federal Reserve is going to postpone their cutting because of auto insurance, because of car insurance? I mean, this is how stupid the market thinks you are, okay? Don't let it trick you, okay? The data is there, okay? So we went ahead and talked about the auto insurance peaks, deflationary pressures, the rate cuts, right? So there's a lot of media misinformation. We're about to give you an example. So now that you have an understanding of the CPI report and actually understand what's in it, regardless of the number, everyone will tell you 3.9%. It came out a little hotter than expected. 0.3% was the core. You know what I mean? So let's go ahead and let me know if you guys hear this, but let's go ahead and take a look at this. And then I want you guys to analyze and let me know if you know to see if you can capture whether someone knows what they're talking about. Let me know if you hear the audio. I wish my intros were this beautiful. I mean, god damn, all those beautiful intros. Holy moly.
A Bitcoin ETF, the CPI report, and an EV about face over at Hertz. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Katie Greifeld. We're kicking you off the closing bell here in the U.S. You take a look at stocks right now. Looks pretty soggy, though. We are off our session lows. You take a look at the S&P 500, down about 0.2%. We were much lower earlier in the day, about 9.
She is correct. We were much lower during the day. Obviously, a fifth grader can tell you about prices, right? Well, that's because the 10-year ended up dropping, right? And then the equity markets ended up going flat, and it's literally near zero.
0.9%. So coming back here, you can see the NASDAQ 100 just flipping green right now, currently unchanged when it comes to big tech. We'll see how that settles up. You take a look at the bond market, a little bit of a lot of volatility, of course, in the 10-year yield after that CPI print. Of course, CPI print coming back up a little bit. Take a look at yields currently off by about.
Coming back a little bit. Okay, yeah. So the 10-year was actually already increasing, right? So don't let them lie to you. You called us an increase. Well, let's continue. And I want you to analyze her body language.
1-2 basis points and Bitcoin's big day. We finally got those spot Bitcoin ETFs. A lot of volatility too. If you take a look at the cryptosphere, though, Bitcoin currently up about 1.4%, Romaine.
Yeah, providing a little bit of a lift here for Bitcoin. Some of the individual stocks are lower, but this is that moment in the sun after the approval of those 11 ETFs. And that's now being punctuated by stablecoin provider Circle's draft registration for an IPO. A registration that comes more than a year after Circle scrapped that bid to list via a SPAC deal. Now, we should point out that confidential filing is more than a coincidence. The scuttlebutt for months has been that a spot Bitcoin ETF approval would bolster other pockets of the crypto sphere. Owen Lau, an analyst over at Oppenheimer, telling Bloomberg Circle's IPO proposal at a minimum opens the door for a conversation with the SEC.
We're going to go ahead and fast forward. We're going to go back to her
to figure out who. While the crypto industry popped champagne a few months ago, unit sales growth to go third. A third said customer demand for rent bit or in-short report as well as used cars.
All right, here it is. Here it is. Let's go ahead and let this guy finish on the CPI.
Among those EVs has been a bit too much. No idea how this affects Tom Brady. We'll get back to that Hertz story and to the Bitcoin story in short order. But we do start off the show with a look at the U.S. economy and the latest U.S. inflation report. A report, Katie Greifeld, that showed a reacceleration in consumer prices for housing, electricity, as well as used cars.
Indeed. If you take a look at the chart behind me, you can see that tick up. If you take
you can see that tick up, right? And then she said, we really can't really see it. Watch.
Take a look at that pink line. I know it's hard to see, but
it's really hard to see.
0.4%. That is the reading on year-over-year headline inflation.
You don't even know what you're talking about.
Figure. So a reacceleration, maybe not what the Fed wanted.
Maybe not what the Fed. This is why I made this video. Maybe not what the Fed wanted. Are you serious? Let me go ahead and replay this.
Line inflation figure. So a reacceleration, maybe not what the Fed wanted.
Yeah, she basically stutters as she's basically concentrating and wanting to unravel something that she really doesn't understand. And then she says, maybe not what the Fed wanted. Yeah, very not strong of a statement. Oh, maybe. Yeah, because you're basically spewing lava crap out of your mouth. If you go ahead and cut automobile insurance, it's very clear that we are on the Federal Reserve's target point, okay? But again, you can see these newscasters, people that write news articles, they bring these people that have a great smile but have no gray matter in understanding anything about the equity markets. And you know what? I'm just frankly tired of it. No one has high quality analysis and actually thinks through first principles. Now, again, I should be happy because it basically, helps me make a lot of money in the stock market because I'm surrounded by a bunch of uninformed people and misinformed people. And again, I digress. But overall, that's kind of the analysis here. Maybe not what the Federal Reserve wanted. Okay, are we talking in maybes here? Are we talking in maybes? You're standing behind the Bloomberg terminal, the greatest terminal, in the world regarding stock market, and then they put this person up here, right? Like, what was your education, right? Where did you get your education? Anywho, complete nonsense. My apologies for being mean, but again, this is exactly what the crap that's on CNBC. The overall media misinformation that we have in this country that literally lead a bunch of people to be misinformed and just, quite frankly, not at their highest peak intellectually. So overall, in terms of our Clover Health bet, we have overall, if you look at United Healthcare earnings, MCR increased by 2 percentage points, over 2 percentage points, higher than the expectation, while Clover Health's MCR has been going down. So overall, I think we're doing really damn well in our analysis, and over the next coming months to years, we're going to start seeing the high quality research that we have been doing playing out and coming into fruition. Ladies and gentlemen, if you like this video, please go ahead and give it a thumbs up, subscribe, and check out our coupon code down below, which will be expiring for lifetime access to our stock terminal. All right, my apologies. I was a little harsh and heated in this video. But again, when you're talking about, investments and looking at graphs, and you go ahead and say, maybe not what the Fed wanted, it's very clear that you just basically read what they told you to read and just spew out nonsense. And it's so sad because these American people and people of the world look up to this brand to give good insights. And you hear this, and it shows you, for folks that are inside of our stock terminal and mastering and bundle, it shows you that you can see the discrepancy between what's on the street, which is information that we have, and what's out there in the public domain. And you can see it's not that much. It's not good quality research out there. Okay. So overall, I'm going to be watching the equity markets and taking advantage of any dips that we see. And I'll see you on the next one.